Have you ever wondered if there's a smarter, more efficient way to manage your crypto assets? Something that doesn't require staring at charts 24/7 or living in constant fear of missing out on the next big token. Welcome to AI-powered crypto portfolios, building wealth the smarter way. Today, we'll explore how artificial intelligence is taking over some of the trickiest parts of crypto investing, from automatically reallocating your portfolio to predicting market trends. If the idea of letting AI do the heavy lifting for you sounds appealing, please consider subscribing. Your support helps us continue diving into how cutting-edge technology can help us navigate today's fast-paced financial landscape. First things first, what exactly do we mean by AI-powered crypto portfolios? Think of it as having a virtual fund manager in your corner. Traditional crypto investing often involves manual research, reading white papers, watching market sentiment on Twitter, and reacting to price swings. An AI-driven platform goes a step further by analyzing all these data points and more in real time. It looks at historical price patterns, transaction volumes, social media sentiment, and macroeconomic factors, then makes decisions about when and how to allocate your holdings. It might detect early signals that Ethereum is likely to outperform Bitcoin this quarter, or that a sudden surge in social buzz around a specific altcoin could be a flash in the pan. Why does this matter? Cryptocurrency markets are notoriously volatile. Prices can swing wildly in a single day, and there are thousands of tokens to choose from. Manually tracking them is impractical unless you're a full-time trader. AI tools, on the other hand, never sleep. They constantly pass new data, refine their models, and predict possible outcomes. They don't get fatigued or emotional, which can be a major advantage. Have you ever made a rash decision to sell a coin in a panic, only to watch it bounce back a few hours later? An AI system is designed to avoid such knee-jerk reactions. It relies on quantitative signals, not fear or greed. One standout feature is automatic rebalancing. Let's say you decide you want 50% of your crypto portfolio in Bitcoin, 30% in Ethereum, and 20% in a basket of promising altcoins. If Bitcoin spikes in value, it might suddenly make up 60% of your holdings, skewing your original plan. Rather than waiting for you to notice, an AI platform can rebalance your positions in the background, selling a bit of Bitcoin to bring it back to 50% and redeploying those profits into Ethereum or the altcoins. This is key because it helps you lock in gains and maintain the risk profile you initially set. Over time, systematic rebalancing can potentially enhance returns and reduce drawdowns, especially in chaotic markets. But what about risk management? Crypto assets can crash just as quickly as they rise. Many AI-driven platforms integrate stop-loss mechanisms, continuous volatility monitoring, and advanced hedging strategies, such as going into stablecoins or even short positions if the market signals a downturn. The beauty is that these decisions happen without human hesitation or second-guessing. If the algorithm's metrics indicate that market sentiment is turning negative, it can de-risk your portfolio before you even wake up. Of course, no strategy is foolproof, but having an automatic safety net can be a huge relief in a 24/7 market. It's not all sunshine and moon rockets, though. Beware of platforms that promise unrealistic returns or guaranteed success. While AI can give you an edge, it's still bound by the quality of its data and algorithms. Garbage in, garbage out. If the underlying model is poorly designed or relies on sketchy data feeds, the results won't be pretty. Make sure to do your homework. Ask about the platform's track record, read independent reviews, and understand its fee structure. Some AI platforms charge performance-based fees, while others might require monthly or annual subscriptions. Also keep in mind that you'll want to ensure the platform is secure. After all, it's going to execute trades on your behalf, so you need to trust it with your funds or exchange API keys. Now, let's talk about some real-world examples. Picture a hypothetical crypto index AI tool that invests in the top 10 cryptocurrencies by market cap, but weights them differently based on short-term momentum signals. If Ethereum is riding high on news of a successful network upgrade, the AI might temporarily boost your ETH allocation. If a smaller altcoin is gaining traction in social media communities or developer circles, the AI might give it a small slice of the portfolio, hoping to catch a breakout. Over time, it reviews performance data, adjusts allocations, and logs the outcomes so you can see how each decision panned out. For an investor who wants to be in crypto without sweating every headline, this approach can be both time-saving and emotionally less draining. Another scenario might be a purely algorithmic trading strategy. The AI uses short-term signals to make quick trades for incremental gains. This type of strategy can work well in a sideways market, but it's riskier if you don't fully understand the parameters. Still, if you're comfortable with the idea of rapid in-and-out trades, an AI system could handle high-volume scalping more efficiently than a human ever could. Just remember, higher potential returns can also mean higher risk. Lastly, consider how these AI platforms can integrate into a wider financial plan. Some aim to be one-stop shops where you can track your entire crypto portfolio, fiat balances, and even other investments like stocks or precious metals. The AI then provides a comprehensive overview, maybe telling you that your overall exposure to high volatility assets is too large, or that you might benefit from diversifying into stablecoins during uncertain market conditions. By bridging the gap between crypto and traditional finance, these platforms help you see the bigger picture. It's not just about chasing the next 100x coin, it's about managing wealth responsibly over the long haul. If you've enjoyed this in-depth dive into how AI can build and manage crypto portfolios, you might also find it enlightening to watch our previous video, The Rise of Deepfake Empires, AI's Role in Digital Deception. There, we explored another side of AI, where it's used for nefarious ends. Together, these videos show two extremes of advanced technology. One that can bring financial security and convenience, and another that erodes our trust in digital media. As with all powerful tools, AI is a double-edged sword. It amplifies whatever motives humans bring to the table. Thanks for tuning in. I hope this exploration of AI-powered crypto portfolios gives you a glimpse into how machine learning can help you invest smarter and how it might one day become as common as having a robo-advisor for stocks. If you're thinking about taking the plunge, remember to do your due diligence, keep realistic expectations, and perhaps consult a financial advisor for a second opinion. As always, stay curious, stay cautious, and keep exploring how innovation can shape a better future for us all. Don't forget to subscribe for more insights into the latest ways AI is reshaping our world. Until next time, happy investing.